Welcome to Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. And today I'm joined with Cate Bakos, Chair of the Property Investment Professionals of Australia, Melbourne Buyers Agent, and my co-host on the Property Trio podcast. We're diving into Ballarat, a market that's suddenly gone from friendly handshake deals to buyer's agent volume, off-market requests, and competition that's pushing up the lower price segments fast. Cate breaks down what's really driving demand, why investor-led hotspots can be risky, and what buyers need to watch for, especially if they're purchasing from interstate without seeing the neighbourhood. Plus, we take the opportunity to touch on where Melbourne is quietly moving when you look beyond the headline median. Let's get into it. Cate Bakos, thanks for joining me back on Geared for Growth.
It's good to be back, Mike.
Yeah, I say back because it has probably been 2 or 3 years. And I suppose for people that maybe don't know, we have a podcast together called the Property Trio with Dave Johnston. So we do podcast every week. So I suppose I've neglected you on this show because I'm just like talking to you every week. But
yeah,
you've got a lot to
Cate
offer.
Bakos. Well,
I know, I'm sorry. But the impetus for this particular episode was something that you're kind of able to observe in your own backyard. Now, you're not a buyer's agent that buys around the whole country. You are more of an area specialist to Greater Melbourne, but there are a little couple of pockets around Greater Melbourne regional areas that you do transact in. And one of them is Ballarat, and that has been a location that I've seen in our own data has been going through the roof. There's a lot of talk on forums. There's a lot of buyer agent activity, especially the big volume guys seem to be in there and transacting. So I wanted to get you in and get a bit of an insight from someone who's seen that market for decades, now suddenly behaving very, very different. What are you observing?
Yeah. Well, Ballarat's changed a lot. I've been canvassing that market for 16 years. And, you know, it's like a lot of regional markets, they've got a real country vibe. And when I say country, you know, the agents are friendly. They're less likely to have auction campaigns. It's very private sales centric, and, you know, they shake your hand and the deal is done. It's always been a bit of a relaxed environment, but we've had a lot of higher volume buyers agents hit Ballarat and other regions around the nation, but I'm noticing it because I've seen it change, and I've seen the agents have to pivot as well. So traditionally I'd go up there, I'd see a handful of properties, I'd get to know the agents over all these years, and you know, it's quite a friendly kind of transaction. But nowadays they're getting a lot of phone calls and a lot of emails from buyers agents saying, get us an off market. It's a new currency, I think. Not one that I subscribe to, but certainly a lot of people do. And they're doing deals with buyers agents without meeting them. So a lot of buyers agents are asking the agent to do a video and to send it over, and then they'll negotiate over the phone. And some of them will send a building and pest inspector through. So they're not physically meeting the agents. They're not building that same kind of relationship, but there's so many of them, it's become very competitive. What's really interesting is the price point. A lot of people target Ballarat because it's got lower price points. And, you know, if an investor's got $500,000 and wants a freehold, freestanding house, they can go to a market like that. But interestingly, they're not targeting the 650 plus segment of the market. So I've watched a lower socioeconomic demographic segment of that market rise in value because of the sheer amount of competition. But the other, what I would call high quality pockets within Ballarat haven't been performing at the same level, and it could be argued that some of it might be a bit of an artificial rush that's just mostly investor driven. So that's always a concern of mine in any market. When you've got a segment that's driven so strongly by investors, you've got to ask yourself, how sustainable is this?
And that begs an interesting point. When we've got interest rates have just risen marginally, and some banks are predicting it's going to keep the same until 2026. I think others are sort of saying we've probably got another 25 basis points in us. That price point pressure is probably going to be stronger. For example, if people are transacting sub 650, I'd expect that to maybe be more increase than decrease. So it kind of begs the question, if if we do jump slightly above that bracket, and you're talking about some, more quality properties, are we missing out on the gold rush at the bottom sort of quartile, or should we be kind of thinking, well, eventually that feeds its way up into the upgrader market? That's something that I'm not sort of clear on myself.
I think you've got to look at genuine growth drivers. How are they genuine and how are they sustained? You can't bank on investor sentiment carrying something forever. And Ballarat's found itself, on a lot of heat maps with some of these portals that are selecting areas that perform. And if I segment Ballarat even further, we're seeing a lot of activity in one suburb called Wendouree. Now that doesn't mean that other suburbs around Ballarat that offer sub 650 properties aren't good, but the danger is always when you've got some hotspots that have been selected by third parties. The month that they stop listing on that hotspot list, what does that mean for a place like Wendouree? So it's got to be a sustained growth driver, and sustained means that it's attracting owner-occupiers as well. It can't just be an investor hot market. We've seen what happens when investors flock to areas and then something changes and they all jump off. And, we can cite some of the mining town experiences from 15 years ago, and I'm sure there's a lot of sad stories out there. I'm not suggesting that there's parallel with Wendouree and some of those Queensland and WA mining towns, but when it's only driven by investor sentiment and when you're getting some ridiculous lofty levels of competition that are pushing prices beyond what some of the surrounding suburbs would have on offer when they've got very similar outlooks and drivers to places like Wendouree, I think that's where you've got to be really specific about where you target, and you've got to apply a bit of caution when something is so overrun with investor activity.
Yeah, a very good point. And I suppose Darwin will be a case in point where we might sort of look at that 5 years into the future. And I don't have the data, but I suspect that that's a very heavily driven investor increase in the median price up there. It remains to be seen what will happen in the sort of 5 or 10 year mark. What are the local agents on the ground that you've known for a long time? How are they kind of reflecting on the heat of the market and just the sheer kind of attractiveness of Ballarat from people all over the country wanting to get a piece of it?
Well, they had a little bit of practice in 2021 when we had our lockdowns in response to COVID, and a lot of people were looking to move outside of Melbourne and go where they could have a bit of freedom and a bit of space. So Ballarat had an enormous surge. In fact, it grew 25% in just about 1 year. It was a very hot market. And so the agents were experiencing something they had never experienced before, certainly not in the time that I've been chatting to them all. And they ended up, because you've got a situation where you have private sale campaigns and a vendor will take the first offer that they like the look of. And so you had these really, really tight timeframes for campaigns, and some of them were listing before the photos had even been done and they were going on the internet. I remember going up there in 2021 and there was a bit of a queue, and I thought I was seeing a property with an agent that the photographer hadn't inspected yet. And of course she told a few people they were all there. So the agents are used to this kind of competition and they've had to pivot again. What they typically do is release the contracts and give everyone a certain amount of time. So for example, you'll get a message saying, we've got this property and we're opening it at this time and we'll take all offers and close it out by 4 o'clock tomorrow. So you've got time to do your due diligence, albeit under a lot of pressure. And that's how they're generally dealing with it. Of course, when you're dealing with vendors that will take the first offer that's appealing, sometimes the vendor decides and it sells straight away, and so you've missed that opportunity. I can be on the road and be fielding calls with agents saying, hey, we've got a few offers on this one, we won't be able to wait for you. So that's always a risk. Some of the agents have talked about the various buyers agents that they're dealing with, and like any industry, you've got your good and your bad. And some of the guys that are very, very active up there and doing a lot of volume do it well, and they've got processes in place. But of course, there's lots that don't do it well. And the agents talk about some of the really troubled areas where stock has been very tough to move over the years, and areas that I avoid. An area that a couple of property managers won't even manage properties within. So I'm talking about a really challenging environment socially. And agents are saying that they've been able to move some of those properties for enormous prices, and the vendors have been overwhelmed and over the moon because the buyer's agents haven't understood the area and haven't come down and checked them out in person. So getting a building inspection is one thing. It tells you that the dwelling condition is all right, but it doesn't tell you what the surrounds are like. So, bad behaviour like that, I would say that that's negligent if they're not aware of the area. We're seeing a bit of that as well, and the agents do reflect on that.
There will probably be some people listening going like, oh, well, that's all very well, Kate, but I don't have 750 plus to spend. And surely, there are a lot of buyers agents sort of saying, if you don't have that budget, we don't want to work with you because we don't believe in the quality. But there will be people just sort of saying, look, I'd rather get in and get something maybe in a lower socioeconomic area because, you've kind of got to be in it to win it with property sometimes. And in your own portfolio, you have quite a mix, but you do have some lower socio. So I'm interested in whether that kind of informs your decision to sort of say, look, I'm a little bit nervous about these price points, or can it be sort of done and managed and be successful if we're, even talking about some people transacting in the sort of $400,000 or $500,000 range in some parts of the country?
Yeah, I think everyone deserves an opportunity to have a crack at investing if they've saved their deposit and they're really keen to get on the ladder. You've got to be careful about the area that you target, though. And I think when we're talking about a $500,000 or even a $600,000 price point and you're wanting a house, a freestanding, freehold house, you're likely to be getting into an area where it's a bit more challenging. And if you're an interstate investor, borderless, and I've done it myself, so I'm speaking from experience, the good and the bad, you've got to consider the maintenance as well. When you're looking at an area in a capital city, in a blue chip location, even in a great region, in a blue chip location, it's highly likely that those tenants are working. They're paying a larger rental amount and they're probably, professionals. When you're going into a lower socioeconomic demographic, you're not looking at something that's an aspirational area, you're looking at an affordable area. That's the first point I'll make. And you're not likely to have both parties working. There's a higher chance that you've got more people at home, kids at home, a parent at home. And of course, the wear and tear is the translation that I'm trying to make here. And then you've got to consider, how often do I need to look at redoing the kitchen or the bathroom or the flooring, whatever it might be, because wear and tear is hard. You've got more people living in this house. And of course, if it's a long way away from a capital city, how will you manage that as a landlord? Are you doing it yourself? Are you doing what my husband did and rigging a trailer and driving across, an interstate border and then continuing to drive because it's nowhere near a capital city? And of course, you've got to go to Bunnings and make sure you get everything you need because, it's another 3-hour round trip to go back to Bunnings if you've got that wrong. And so you've got to think about these things, because if you're not doing the renos yourself, you're paying someone. And of course, you're in the region, you're probably a long way away from getting the goods, so that you've got to focus on factoring in freight as well. The point that I'm making is the maintenance can be a bit of a burden. You think that you're getting a bargain property and a pretty good rental yield, but you've got a tighter cycle of maintenance to be thinking about, and generally it's a bit more expensive. And when you multiply that out, because a lot of investors who are going for the lower price properties and higher cash flow, they need to have more properties in their portfolio to reach their retirement goals. So multiply all of that out. How many kitchens a decade are you having to bankroll, and what is the implication on your cash flow when you're doing that? I think that's the biggest and the best learning that I had, because I started out as a graduate chemist, and I've said it before, the salary wasn't great, and so I did have to go for lower price properties, and I was very focused on yield in the early days. There's nothing wrong with that strategy. It's one strategy, but understanding the cost, the long-term cost of that strategy is really important. And not to mention, in some of these lower socioeconomic areas, you can have a bumpier journey with your tenant experience. You don't want to be going to the tribunal or dealing with malicious damage or, really tough wear and tear, or subletting, or students that are making a mess of things. And your chances are much higher of dealing with that when you're going for a lower price property in a regional city. So to answer your question, Mike, if someone's got 600,000 to spend and they want to invest, I absolutely believe that you can have a good tenant experience and you can have growth and you can avoid some of those maintenance headaches and avoid the deluge of buyers agents pushing prices up momentarily. If you think long and hard about some good locations where you've got a better chance of a blue chip area, you will be looking at a unit though. And I know for a long time apartments have been on the nose. And if you look very carefully and segment the apartment types, you'll see some that are absolutely performing in lots of different locations, not just the capital cities, but I can certainly talk about Melbourne. And you can also consider villa units. And so and I should add some decent quality townhouses in some of the regions. So you definitely have some options there. You don't just have to go into a low socioeconomic area that has buyers agents who will tell you that they're purchasing more than 20 in that location in 1 month. Now, if one firm is doing that and you've got multiple firms, that's a lot of pressure on those sales.
Yeah, and not necessarily representative of that market long term. And I guess that's the thing. And when you talk about the renovations, I mean, there'll be people sort of saying, well, repairs and maintenance is tax deductible. And if you do a kitchen, you get the depreciation. And I've challenged people before saying, like, I don't want to invest, in another state because the tenant will sort of say, I need a new light globe and it costs me $300 to get an electrician to do that. But then I'll say, but if that property is going up at 6% per year, it would probably make sense to pay $10,000 to change that light bulb, right? But that's the crux of the point, is that if the property isn't growing in value and you do have that cash flow shortfall here and there with repairs and maintenance and renos every now and then, that's where you can get yourself into trouble. So it begs the question, what are the drivers for Ballarat? How much certainty could we have that this is a market that will perform?
The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
Ballarat's got a lot on offer, but the problem with some of these third-party data houses that just give you one suburb is they're not necessarily capturing all of the other good ones. So Ballarat is an interesting provincial city. It's got some stunning buildings, some amazing architecture, because it was left alone when they decimated a lot of our beautiful gold rush architecture in Melbourne. Victoria was a very, very rich state when the gold rush was taking place in the mid-1800s. And so you can go to Ballarat and Bendigo and Castlemaine and a lot of these gorgeous gold rush townships and see it for yourself. What's interesting about Ballarat, though, is it's got a growing population. It's over 100,000 people, which, denotes a pretty sizable city. You can get to Ballarat on the train in under an hour and a half, and I can drive there from Yarraville in about an hour and 15. And when you have a look at the population growth, it's steady, it's not crazy, but we're getting a lot of skilled migrants taking professional roles in Ballarat as well, because it is a health and education centre. So we've got two hospitals there, the Ballarat Base Hospital and St John of God. We've got the university, which is Federation Uni, it used to be Ballarat CAE, and we've got some really good schools. Some of the state's best schools are spread across Ballarat and Geelong, and you've got a beautiful stretch when you go through the city on Sturt Street, where towards the western side of town you've got some great schools. So Ballarat, Clarendon College and Loretto, St Pat's, they're some of the finest schools in the state. So a lot of people have opted to move there and enjoy the great education for their kids and have a lifestyle that is attractive, but also from a jobs point of view, it's quite a diverse economy. We've got not just the healthcare and the education, but Ballarat's a manufacturing centre as well. And a lot of people have laughed at me when I've talked about Australian manufacturing, but it's definitely there. We make our train carriages there. We've got Mars, McCain's, we've had brickworks there, we've got tyre manufacturing. So there's a bit going on. And lastly, but really importantly, we've got government services that have been decentralised. So the government's created, a lot of jobs up there. We've got consumer affairs, 000, Vic Roads. I know there's more NDIS and TAC, which we've also got in Geelong. And we've also got IBM, which is down at Tech Park. And there's a lot that I've just mentioned there that gives a lot of diversity, but being as close as it is to Melbourne, we've also got people that can live in Ballarat and commute back here. And if you get to the train platform, you can see quite a few people on it at 7 o'clock in the morning. So yeah, there's a lot going on. And we've likewise, Bendigo is another centre that has a lot in common with Ballarat. It's just a little bit further from our city, but yeah, it's definitely somewhere that I feel will continue to perform long term. I just don't think that we can expect it to deliver, double digit growth. It's always been a bit more of a slow and steady.
So it's an old place with quite a history. It's quite a good place for tourism, a diversified economy. 100,000 people is a significant regional centre. I mean, we're talking 2/3 the size of Darwin as one of our capitals, right? So there's a lot for investors to be enthusiastic about. With these sort of satellite cities from the capital, so if we look at, say, Sydney's got Wollongong and Newcastle almost sort of like equidistant either side, typically these cities have a better price point, maybe a little bit more lifestyle, and that tends to sort of or trickle through from, those higher prices in the capital cities. What is that sort of price differential from, say, something equivalent in Melbourne to Ballarat? Is there an attraction to go there?
Yeah, there is. Aside from the lifestyle and the schools, Ballarat's a pretty cold place, so that's probably the biggest disclaimer. But value proposition is huge. And if I talk in price points, $1 million gets you something really impressive in a great part of town. In fact, I was about to say I've never spent $1 million, but I have once. I had an owner-occupier doctor ask me to negotiate the purchase of a beautiful property, and it was this stunning Victorian on big land in the city with a wraparound balcony. It was beautiful. Arguably, it needed a little bit of modernising, but it was a well-loved family home that was completely livable and walking distance from the city centre and the train station. It was a bit of a hike. I think I did it in about 15 minutes, but what a location. So I think if you could circle 700,000, you could get an attractive period property in a quality suburb in Ballarat, and certainly 800,000 gets you something very impressive. I don't often spend over 800. I think I could count on one hand the number of properties I've purchased in Ballarat over 800, and I've purchased over 300 properties over the years.
Wow. But 800 to me still kind of seems cheap, like I know most investors according to our data, 2025 average spend is about sort of 650, but still like for people that are in Brisbane, in Sydney, in Melbourne to a lesser point because it's had a bad couple of years. I mean, what can you get in Sydney for anywhere close to 800? Maybe not even land these days.
Apartments. I'm talking to people that are making the transition from Sydney to Melbourne. They're deciding to buy here and live here. And they're telling me that they could buy a house for the price of a unit in Bondi, which, I just can't comprehend that. But, Sydney's always embraced apartment lifestyle better than we have. We've had an oversupply, and they've got a very pretty harbour with a lot of really well-located apartment blocks. So I don't want to talk down the apartments. I'm totally aware of the fact that some of them are really beautiful, but Ballarat, over again, it's amazing value if you're looking Australia-wide at what you can get.
Yeah. So for someone that maybe is about to transact in Ballarat, what are the most important things that you think that they need to know or be aware of, or be questions that they're asking their buyer's agent if they've just sort of said, look, this is the location we're targeting, we'll get back to you with the property. What's the best info to give them?
Well, I think it's imperative that your buyer's agent sees the property. You know, an agent videoing a property, agents, their job's to sell it. They'll do everything they can to sell it. And I think the bigger threat isn't the dwelling, it's the location, it's the neighbourhood. And if they're dealing with someone that doesn't know Ballarat and all of its intricacies, they could be buying in a pretty frightening area. There's, a lot of lower socioeconomic areas. There's a lot of patches of social housing where I've felt quite unsafe before, and I know that could be seen as a really snobby thing to say, but if you're investing, you want to make sure that your tenant feels safe and you're attracting a tenant that wants to live there. I'd also say don't just rely on an agent video and a building inspection. It's really important that your buyer's agent knows the area. And lastly, Ballarat's bigger than Wendouree. Wendouree just one suburb. There's so many great suburbs, and it's a high growth city in terms of its rate of building and its fringe activity. I would steer clear of the fringe areas where the blocks are small and the houses are new. I'd be targeting the areas where the locals absolutely want to live. And if you're closer to town and closer to where the train station is, which is on the border of Soldiers Hill, that's a beautiful suburb, and you're on the Melbourne side of town, they're the areas where a lot of locals really favour this beautiful city. So I think having someone that knows the place and is aware of the socio-economic demographic and also is visiting it and seeing it and videoing it for you themselves, that'd be my best tip.
That's awesome. Before I let you go, because I'm aware that I've cornered a legend of the property industry and a Melbourne specialist, there's a lot of eyeballs on the great state of Victoria, partially because it's had a shocking couple of years. Obviously, the Ring of Steel was very expensive. The state debt is in a little bit of a mess. It is kind of a depressed market, and people are, especially from places like Bondi, as you say, are seeing so much value where they can have a postage stamp in Sydney or they can have an estate in Melbourne. For people that are sort of in and around that sort of $750 or lower budget, there's been a lot of talk about places like Frankston, places further out west of Melbourne that maybe have some land supply risk. Yeah. Do you feel like there are viable alternatives to what Ballarat could deliver to property investors in the next little while in the greater sort of Melbourne area?
Yeah, of course, there are. Don't be afraid of units. There's units and there's units. If it's well run, if it's got a great strata or OC manager, if it's in a really good spot, if there's very few in the block, if your land to asset ratio is really high, and if it's an area, a pocket that is really aspirational, don't be afraid of a unit. If you're really wanting a house though, and you've got $750, if you've even got $650 to $750, there are options. You don't need to be in the fringe areas. I think that, a local area specialist will tell you exactly where you could be. I could find someone a property within the 17-kilometre radius up to $750, and it would be supported by, rail and infrastructure rather than having to drive out to the burbs and get stuck in a traffic jam or, get to a station that's driving distance away at 6 a.m. so that you can get a park. There definitely are alternatives, but I would say don't turn your back on great units and apartments because the oldies, the goodies, they're great and they are performing.
And Melbourne in general terms has not really hit the core logic numbers. Now, obviously, there are some flaws with the methodology of just looking at median prices in Victoria. We've had the first, the homeowner grants get a little bit of pressure at that lower price point, which kind of tweaks the segmentation metrics, and maybe the market could actually be appreciating, but it's not yet borne out in the data. For people that are kind of thinking, look, I'm all about Melbourne, Greater Victoria, do you feel like it's moving at the moment? It seems like the sentiment is there, the activity is there. It just hasn't really clicked over into the numbers, at least from Cotality's metrics.
Yeah, for anyone who is watching the numbers, and a lot of people do, segmentation is the secret to understanding Melbourne at the moment, because there are some parts of Melbourne and some dwelling types that are really flying, and then there are others that are lagging. And that's telling the full story, because median is literally the midpoint. We're just looking at one piece of data and it's not telling the story. When you have a look at the quartiles, that tells a bit of a story. And then when you have a look at the dwelling types down to a really granular suburb level, you can see what's going on there. All of the markets where houses have been, soaring, where you're getting a freehold house on a decent sized block within a 20k radius and supported by rail and local shops, etc. They're also experiencing local growth because owner-occupiers, namely first home buyers, are taking advantage of the sub 950 deposit guarantee as well. Those areas are performing strongly. I've said it before, I've worked a lot in the Laylaw, Thomastown, Sunshine West markets, and they're soaring. They've performed over 10% in 1 year, but you've got to be tapped into someone on the ground to get that intel, or looking really closely at very granular data, but it's definitely happening.
Beautiful. Well, thank you for giving us that overview of Melbourne, of course, a deep dive into Ballarat. And I thought I should take this opportunity to cross-promote something that Media Watch loves to sort of bash Channel 9 and Channel 7 for doing every 5 minutes, but let's have our own go at it. You and I are actually doing a live event in Melbourne with Dave Johnson, the mortgage broker par excellence. So we've got the mortgage guy and property strategy, we've got the buyer's agent, and then me, I suppose, the token tax nerd. For people that want to maybe come and have a chat about the Melbourne market, the greater property market, and come and shake hands with us and have a couple of drinks, do you want to flog that to people on the show?
I would love to. And there's amazing Pete Kalizos is joining us too. I know you've had him on.
Oh, absolutely, yeah.
So who doesn't love Pete? He's a legend, and he's someone that has been a mentor and a really special property star that I've looked up to for ages. So on Thursday, the 5th of March, we're meeting Latrobe Golf Course, not Latrobe Valley, Latrobe Golf Course in Alphington. And we've got tickets on sale, and the doors open, I think it was 6:30 for regular entrance, and we've got some VIP ticket holders that are joining us for a bit of a private catch-up and drinks and a chat before the show. If you want to register, if you want to grab a ticket, it's on our website, propertytrio.com.au.
And I'll bung that link in the show notes as well. I mean, I'm really looking forward to that. And of course, there will be a lot of people from Melbourne there, and an opportunity to ask some questions of you as a Melbourne expert as well. And it should be a bit of fun. The tickets are really just sort of covering the ability to put on the event, and some drinks for people as well. So looking forward to doing that one. And anyone that's listening, we'd love to get you along to that. But Kate, thank you very much for sharing all of your sagely advice today.
Oh yeah, go Ballarat. Thank you, Mike.
Go Ballarat. Cheers.